Now we will be dealing with the abnormal loss concept. How can we handle that in journal entry format? Abnormal loss is the loss happened due to the carelessness of the operator or owner. Should be borne by he himself, right? You cannot recover it from the customers. Whatever the abnormal loss may be. Is that okay? Whatever the loss happens, that will be debited to the abnormal loss account. What you lost should be credited. Maybe stock lost, or your assets may be lost in fire accident or some other reason, or some other office equipments and fuels, consumables, like whatever it may be lost. So lost means those items are moving out. Should be minus item. Should be the minus item. And where you have to debit? It is debited in the name of abnormal loss. To what? It may be goods lost. It may be some assets lost. Or it may be sometimes some consumables like stationery in office and packaging materials in showroom and all. Some consumable lost. Okay, all the losses are going to be credited, means those items are going to be credited and it is debited as a loss, abnormal loss. Loss is always debited, so abnormal loss. Finally, this abnormal loss is going to be adjusted in which account? Transferable to the P&L account. So the journal entry for the next one being P&L account debit to abnormal loss. To abnormal loss. Is that clear? Ultimately, the P&L account will be adjusted only in the owner's account, capital account. So owner is responsible for any abnormal reasons. Any abnormal reasons. You understand? For example, you go to the shop and a restaurant, you order for hot milk. They prepared the hot milk with the 200 ml. Okay, the cost of 200 ml milk being 25 rupees. 25 rupees. As you asked for the hot milk, there will be evaporation loss of say 50 ml. This is called normal loss. If any evaporation loss, which is the inherent nature of the process, after that loss, the quantity will be reducing, but value will not be reducing. As you are being the consumer, you have to pay 25 rupees for 200 ml. Isn't it? So you ask the seller, sir, 250 ml itself 25. Now you are charging 25 for 200 ml. Are you cheating me? Then immediately comes for the fighting, right? So because of your requirement, we are preparing. While preparing, inevitably there will be a loss of 50 ml because of the evaporation. Inevitable. That will also be recovered from you, and plus preparation cost and other costs will be added for hot milk. Is that clear? Assume that the same happens, 250 ml milk you asked and price being 25. Price being 25. While bringing the milk to your table, the server accidentally dropped. Server accidentally dropped and slipped. Anyhow, out of that slipping, almost 150 ml lost. Now he keeps that cup in your table, contains only 100 ml. If he bills 25 rupees, what happens? Immediately you go for fighting. You spill that what milk? How can you demand that price for the spilled by you, by me? I cannot pay this amount, right? So what happens then? The shopkeeper says, oh, no problem, sir. For 250 ml, 25 for 150 ml, it may be roughly 15 rupees. I will subtract that, so you pay me only 10 rupees. If I could have supplied 250 ml without any drop, then I can charge 25. It's reasonable. But the loss is due to my absence or my carelessness. So I cannot transfer the carelessness loss to the customer time. So for the 100 ml, it's only 10 rupees. For the 100 ml, it's only 10 rupees. That's how the billing will be there. And what happens this amount? This amount will be now earned by the owner's pocket. Owner's pocket is nothing but P&L account. His own account. Whatever the amount left over in P&L account is for the owner only now. This is also loss for his carelessness is going to be adjusted in his own account only. Clear? Hope you will be able to understand. In case of abnormal loss, that loss will be transferability fall to whose account? Owners. The person who is responsible for that. 250 ml supplied and the price is 25, but the server supplied properly. While drinking, you yourself missed to hold it properly and you lost around 150 ml milk there. You poured that milk in the shop itself. You immediately call the server. See, 150 ml is available in the shop itself. I have not consumed. Deducted 15. I will pay only 10 rupees. What will happen? Always think whether you are stronger and the server is stronger. If server is stronger, then you cannot come out of the shop. Isn't it? It's your reason you made this mistake, then it should be charged from your pocket. So from this it is very clear, in case of abnormal loss, the person who is making that loss carelessly is responsible for that. Normal loss is nothing but inherent nature of the process. There will be small quantity will be lost, which is the inherent nature, unavoidable. In case of fuel, while filling or transporting the fuel due to the evaporation, there will be some loss. While preparing any food like here, some quantity may be lost. While stitching your shirt, you may give 2 meters or 3 meters of cloth, but after stitching, you have only 2.5 meters rather than 3. Okay, that 0.5 may be wastages, scrap. Whatever it may be, inevitably some loss will be there. That loss cost also be recoverable from the customer. Means 250 ml 25, 50 ml is 5 rupees and 200 ml is 20. Customer has to pay both, isn't it? Because for your requirement only, I prepare the hot boiling milk and automatically what happens? That's the last 5 rupees. 20 plus 5, 25, you have to pay me. Here, this 10 rupees is burned by the person who is enjoying. This is the person who is responsible for the loss he has to bear. And that the abnormal loss may happen for the goods what you have. Right. You purchase the goods for sale. You purchased and kept in the godown, but accidentally you lost some value of commodity. You have the assets with you, the assets may be also lost. Okay, probably accidentally you operated the machine, then because of the power shortage and what it may be burnt, lost, abnormal loss. You have stationery and fuel, oil, packaging material for your office requirement, for the showroom requirement. You kept all the stationery. Accidentally, what happened? Nearby, you have the drinking water. You just accidentally you spill the drinking water in the on the station. All the stationery got waste. Okay, that is called consumable lost. Whenever all these things are lost, it is going out. Going out means minus item. These things are being the minus item. Then what is the plus item? It's a loss. We don't get anything. So loss means loss should be debited. Due to the loss, the business will pay lesser to the owner. So, business says to the owner, there's a huge loss, so the amount payable to the owner is reduced. So, it's a plus item, like the amount payable to the owner is reduced, loss. But the loss is categorized as abnormal because we need to have 2 losses. We are having 2 losses, normal loss, abnormal loss. Now, we have to classify this being abnormal loss. Is that clear? So minus item is for the items lost and plus is for the abnormal loss. Later, that abnormal loss is going to be adjusted in the P&L account because anyhow it is going to be burned by the owners, right? Now let's see the first question. Goods costing rupees 40,000, sale value 50, lost in accident, theft. Okay, lost in accident and theft. Always remember the sale value is not a matter. I purchased for 10,000 rupees worth of goods and I lost that accidentally. You don't say that lost being 15,000 rupees because it is eligible for sale of 15,000 rupees. You lost only 10,000, you lost only 10,000 rupees. You always consider that cost. Then the journal entry B, goods will be predominantly termed as purchases only, right? When you are valuing the goods at cost, it is valued at purchase. Means at cost means purchases, so that's termed as purchases. If the goods are moving out by making some profit, then it's called sales. It's called sales. You understand? Now, abnormal loss account debit. Abnormal loss account debit. Clear? Abnormal loss account debit. 2 purchases. value being 40,000. Clear? Then abnormal loss can be transferred to P&L account. That's another entry. Another entry. Okay, you can parallelly pass both the entry, but in Singar Academy, I have passed only one entry. Transfer entry is not passed here. We'll study all the transfer entry along with the final accounts not here. Okay, but in here you'll understand what are the abnormal loss. Maybe it will be transferred to the P&L account. Second entry. Goods worth rupees 35,000, sale value 60, lost in accident or theft, abnormal. So sale value is not required. With insurance, we have insured. Any loss happens due to the insurance, we can get the claims for the insurance company. We have insured. And we receive the claim being 40,000 rupees. If it is insured, any claim receivable will be handled separately. Abnormal loss part is separate and insurance claim receivable part is separate. So first we will pass the entry for the abnormal loss. Abnormal loss account debit. 2 purchases. The value being 35,000. 35,000. And we lost how much? We claimed how much? 40,000 received already. Then bank account debit to claim received. Bank account debit to insurance claim. ₹40,000. This insurance claim will go to the P&L account. That will go to the P&L account. Is that clear? Second entry is also over. Third entry. Goods worth rupees 60,000 lost in accident and theft. With insurance and the claim receivable still pending. Okay, first you pass the entry for the abnormal loss. Abnormal loss will be shown at its own cost. So third entry being abnormal loss account debit. 2 purchases. The value being 60,000. And the insurance claim receivable. Then outstanding insurance claim. Not yet received. Received means bank. The amount still pending means party's name should be there. If the party's name is missing, we can use a common name also. Outstanding claim is a representative personal account, I already told you in the previous class. Whatever the nominal account may be, with that nominal account, if there is any prefix or suffix, that becomes representative personal account. Is that okay? So, salary is nominal account, outstanding salary is the representative personal account, or salary paid in advance. There is a suffix. So, representative personal account. Similarly here, outstanding claim, it's a representative personal account. Debit for what? To insurance claim. This value being 50,000. Fourth one. Asset destroyed in fire accident, WD value being 1 lakh and insurance claim receivable being 50. Then what happens here? Asset destroyed. So basic entry is this one, right? Asset should be debited. Asset should be credited. So abnormal loss upon debit to asset. This value being 50,000. Sorry, 1 lakh. And the insurance claim receivable. Outstanding insurance claim upon debit to insurance claim. The value being 50,000. Is that clear? Stationery worth 10,000 destroyed in fire accident. Stationery. Fifth one. Then loss, abnormal loss upon debit to stationery. Value being 10,000. Is that clear? Hope you will be able to now understand this. What happens if you prepare the final accounts, sir? If you prepare final accounts, what happens? Clear? If you are preparing the final accounts, this abnormal loss will be transferred to P&L account. So the entry being P&L account debit to abnormal loss. your profit and loss will be reduced to this extent. Owner says, I earned 10,000 rupees profit, where he lost 40 rupees, 40,000 rupees. So ultimately, he is end up with loss only. It is going to be adjusted from profit and loss. Ultimate answer for the or ultimate balance for the owner is going to be reduced. Second one, abnormal loss to purchases and P&L upon debit to abnormal loss, the value being 35. For this, insurance claim is a revenue credit to the P&L account. So the entry being insurance claim account debit to P&L account. To P&L account. Ultimate. What's the ultimate? Because of this reason, end up with 5 rupees gain. Isn't it? Last 35, claim received 40, gave you 5 rupees net gain. Net gain. Anyhow, in your P&L account, 35 is in debit side, 40 should be in the credit side. In this case, abnormal loss to purchase, profit or loss upon debit to abnormal loss, the value being 60. Here the entry being claim, gain credit to P&L account, insurance claim account debit to P&L account, the value being 50. The value being 50. Is that clear? In your P&L account, how do I record? Last 60 in the debit side, claim received in the credit side, and the insurance claim still receivable will go to the balance sheet in the asset side, outstanding claim receivable, not yet received. Am I right? That's how it will appear. How this will appear in your final accounts preparation, I am giving the notes here. The fourth one, abnormal loss upon debit to asset. And this abnormal loss will be transferable to the P&L account to abnormal loss, the value being 100. Insurance claim receivable can be transferred to the P&L account's credit side, insurance claim to P&L account, the value being 50. The value being 50. Is that clear? And finally here, abnormal loss debited to the P&L account to abnormal loss. Clear? Clear? Remember, the other way of recording this one, okay, what is that? Abnormal loss to purchases, and later this abnormal loss is transferred to the P&L. Where do you record the purchases? Where do you record in final accounts? While preparing the final accounts, you show that in the trading account, debit side or credit side. You are going to show in debit side, but this purchases is negative balance. Then it should be shown where? Credit side. Or it should be subtracted from the purchases, like purchase return. So from the purchase return is subtracted. Not only that, the purchase item used for other than sale purpose. We have already seen that, right? Owner has taken, and sometimes used for office purpose, charity purpose, fixture purpose. In those cases, purchases are going to be credited. Am I right? Similarly, purchased item is not sold but lost. Then it is also subtraction from the purchases only. That value is going to be subtracted. That purchase is usually shown in the debit side of the trading account. Am I right? Otherwise, in this case, should be shown in the credit side. Or I can simply name this being trading account. If I summarize this entry, combine entry for this. Abnormal loss debit, abnormal loss credit, cancel. Ultimate value being P&L account debit to trading account. This is what about the ultimate value. When there is abnormal loss, credit in the trading account, debit to the P&L account. Very simple. Clear? Hope you'll be able to understand. The same happens for all. But for the asset, it may be totally different. You cannot club this. You cannot club this. Now, what happens here? What happens here? Abnormal loss of stationary item, abnormal loss to stationary. This abnormal loss is transferred to the P&L account. Where do you transfer the stationary year end? By the year end. Come on, tell me. By the year end, where will you transfer the stationary items? Assets, stationary consumed. P&L accounts debit side. To the extent of stationery remains unconsumed, otherwise stock of stationery will appear in the asset side. You purchase the stationery used, then it is debited to the P&L account as an expenses, right? So the used stationery is an expenses debit to the P&L account. So the stationery is also going to be transferable to the P&L account's debit side. Is that okay? Then stationery account debit to cancel, I am transferring that to the P&L account. If I club, what happens here? Abnormal loss debit, credit got eliminated, stationery credit debit got eliminated, P&L account debit credit eliminated. It means when it's all about the items in the P&L account lost abnormally has no journal entry. Has no journal entry. Do you understand? Ultimately, we don't have any entry. In case of stock, the journal entry is very simple. P&L account debit to trading account. In case of assets, P&L account debit to assets. These two. But in case of consumables, like no entry, you don't need to pass any entry. You understand? A simple ultimate entry. Simple entry. The first level before you transfer to the final accounts, what's the first entry? Then the entry will be there. P&L account debit to abnormal loss to the item of loss. Abnormal loss to item of loss. The item may be either goods or assets or stationery. This is a basic entry. On transfer, the abnormal loss is transferable to the debit side of the P&L account, and rest can be simultaneously adjusted in that same concern account. Where goods is replaced with purchases. Is that clear? The most important journal entries is this part, abnormal loss. Even at your final level, it will have various different types of applications. So unless you are mastered with this understanding, you cannot apply that later on. So you have to be clear with this. Clear? Now let's move on to the next illustration. This one. Do you have this in your text? Do you have this one or not? No. Then you can copy this now. So the question number 16 is all about purchase related transaction inclusive of GST. While purchasing, you have to pay the GST for the purchases also. Anyway, that's going to be refundable. Then the basic journal entry in this case being purchases account debit. And of course, you will get the GST also back. Temporarily, I will keep this being CGST or SGST. Okay, sometimes you may have IGST for inputs to bank. Or in case of credit, the party's name will be there. IGST is applicable for purchase from one state to the other state or interstate for the supply. CGST and GST will be applicable in case of purchase and sale happens within the same state. Question number 1. Purchased goods from Sahil for 50,000 plus SGST, CGST being 9% each. Sahil, so credit purchase. The journal entry being purchases upon debit. Purchase upon debit. CGST, input CGST account debit, GST for input debit. Anyhow, you will be able to get it back. So usually it is named as ITC, input tax credit. Government's angle, it may be credit because government has to pay you. It's a liability for him, so it's a credit for the government's angle. But for the buyer's angle, he will get it from the government. No, it's an asset, so debit balance. Too sorry, too sorry. Okay. This value being 50,000 rupees, CGST and GST 9% each. This one is 4,500, this one is 4,500. Overall, 59,000 amount payable to Sahasri. Purchased goods from Sam for rupees 40,000 at a trade discount of 10% plus CGST, GST 9,000 each. Trade discount 10% each should be first removed. So 18,000 is the ultimate value. Okay, okay. 40,000 rupees for that. For that 10%, 4,000 will be subtracted. 36,000. 20,000 was paid immediately and the balance payable after 3 months. After purchasing, immediately 20,000 is paid. Okay, balance will be payable later on. Now, first journal entry, Sam, credit transaction. So you have to write the Sam's name, 2 purchases. Second one, purchases for debit. The value of the goods being 36,000 and CGST on inputs debit 9% on this being 3,240. GST on input debit 3,240. To bank, immediately a portion is paid. How much? 20,000 is paid immediately. Balance may be after some period. So until that period, party's name will be there. Sam account will be there. This value being 22,480. Is that clear? Now, third question. Purchased furniture for rupees 44,800 including IGST. If you are purchasing the furniture, you have to debit furniture account. Furniture account. If you have the chance to get the IGST back, if you have the chance, sometimes you cannot get. But you assume that this IGST money is recoverable, then IGST input will be posted. Account debit to bank. In this case, the 44,800 including IGST 12%. It already includes. Means value is 100. IGST in this being 12. Payable value being 112. Is that clear? This 44,800 is inclusive of this one. As 112 share is 44,800 means 100 shares should be how much? 100 shares should be how much? 44,800 into 100 by 112. Do the cross multiplication. You need to have the calculators always. Come on. 40,000 rupees. Actually, without adding the tax, it values 40. 12% on this being 4,800. Furniture 40,000 exclusive of GST. GST 4,800. Amount paid being 44,800. Sir, if I don't have the chance to get the money back, sir, then furniture value itself 44,800. When I don't get, sir, that you'll study at your inter level GST chapters. In case of your purchasing car and all, you cannot claim the deductions. You cannot claim the IGST back from the government. Once paid is fine. That's all you cannot get. If you are not able to getting it back, full value will be inclusive tax. Fourth one. Purchased machinery from Mrs. Symphony Industries for 1 lakh 40 plus CGST and HGST 9% each. 1 lakh paid immediately and the balance payable after 2 months. So, fourth one. The journal entry being machinery account debit, 1 lakh 40, and for that you have to pay CGST and HGST. Input CGST and SGST. 12,600 each. And immediate payment bank 1 lakh. Balance will be payable sometimes later. Until that time, I am going to use his name for reference to whom I have to pay. Symphony Industries. How much? 65, 200. Am I right? Now let's move on to the next one. In case of sale transaction, you are going to pass the entry in the reverse manner. While collecting the money for the sales, you collect the money for the goods as well as output GST. IGST as well as SGST, CGST, output will be there. So, back to those things also be in credit side. Credit side means you are supposed to pay to the government later. So, for government's angle, it's a debit balance. For my angle, it's a credit balance. Sold goods rupees 50,000 in cash and charge CGST and HGST being 6% each. So, fifth one, bank account debit to sales. The value of sale being 50, but the amount I collect from him not only for my goods, for the government's share also. The government shares are CGST as well as HGST for the central government as well as state government. CGST output and HGST output. 6% on this being 3,000 each. So the overall amount collected in this case being 56,000. Is that clear? Sixth one. Sold goods to Surjit for 28,000, including CGST, HGST 6%. Surjit. As name is given, we assume that sales being in credit. So Surjit's name is going to be debited. Surjit account debit. And this is the total value 28,000, which is inclusive of including CGST. Okay. To sales. To CGST output to HGST output. If the value before GST add GST, you will get value after GST. 6 plus 6, 12%. If the value before GST is 100 means you need to pay CGST, HGST both put together 12. The value should be 112 including GST. This is excluding GST. This 28,000 rupees is inclusive of GST, means 112 share. If 112 share is 28,000, then what about the 100 share? Come on, what's the value? Yeah, this value is 25,000. So sales value is 25,000, and on that 6% for CGST, 1,500, another 1,500 for HGST. Now we will move on to the seventh one. Sold goods to Kapil for rupees 30,000 and charge IGST at the rate of 12%. Sold goods to Kapil for 30,000 and charge IGST 12%. Receive 12,000 immediately and the balance to be received after some time. So Kapil, a share is pending, balance is immediately received. So Kapil account debit and bank account. How much we received immediately? 12,000 rupees. Total amount recoverable from there. Subtract the amount received to the extent of 12,000. Balance will be Kapil. Okay, payable sometimes later. To sales. And this 30,000 has IGST 12%. So to IGST output. Sales value is 30,000 rupees 12% IGST will be payable on this 3,600. Overall amount recoverable being 33,600. Immediately we collected 12,000 rupees balance. 21,600 could be collected later on. Is that clear? Now, eighth one. Sold goods to Manpreet for rupees 1 lakh at a trade discount of 20%. Trade discount 20% means you have to subtract 20,000, so balance 80,000 rupees. He never bothered about this, and IGST charged 12% on this 9,600. As Manpreet name is given, and whether it is a cash or credit transaction is missing, we'll assume this is being credit transaction, so we can take Manpreet name here. Eighth one, Manpreet account debit to sales. The sale value being only 80. Always remove the trade discount. And the GST is also be calculated on this value, IGST. IGST for output, this value being 9,600. The overall amount payable to Manpreet, the recoverable from Manpreet is 89,600. 89,600. Shall I move on to the next one? Clear? In case of returns, okay, sales return and purchase return, the amount payable will be subtracted later on. If I purchase for 1 lakh, for purchase return of 20,000 rupees, I have to subtract 20 from the 1 lakh, balance 80 is payable. That is called rebate. And discount. Discount also be rebate. Goods costing 5,000 before trade discount 10% returned to SAM. These goods were purchased by paying CGST, SGST at the 9%. Purchase return. So before trade discount, then trade discount 500 is subtracted. This value is only 4,500. Purchase return should be credited. Purchase is debit, purchase return is credit. Then automatically to that extent, SAM will reduce the amount payable to him. SAM account debit to purchase return, the value being 4,500 along with the CGST, SGST payable to that, I am going to reduce payment to SAM. To CGST input, this is reversal of input CGST, it's not output, reversal of input CGST to SGST input. Don't call this being the output, because output should be separately treated, input should be separately treated. In case of reversal of input, should be subtracted from the input only. Reversal of sales output GST will be reversed. Why? Because government monitors whether the output tax is higher than the input tax to check whether there is any violation or not. Okay, so that's why it is not allowed to be set off in the output GST. Clear? This value being 405 and this value being 405, 9%. Overall value being 5,310. 5,310. Kapil was allowed a rebate of 5,000 as goods supplied to him were defective. Okay. Kapil was allowed. So, to whom? To Kapil we have supplied. He has not returned. He called me that some of your goods are defective. I said, okay, show me a photocopy of the defectiveness. He showed me. What can we do, sir? Throw it off, I'll give the discount. In case of sales return, he returns it back, isn't it? But in case of defective, returning cost is unwanted. Carriage and other things are there. No. Anyhow, it's already defective. If I get it back, it's also loss. Throw it off. I'll just adjust the money here. I just give the rebate. Kapil was allowed a rebate. So it's a loss for me. Okay. This is like sales return like. Sales return like you can pass it. He is not returning the goods. He showed me there's a loss. Okay. Showed me there's a waste or defect. I said, okay, leave it. I consider this being sales return. Okay. So the rebate is considered as a sales return. To what? Sales return, the value being 5,000. Of course, CGST, while sales is output GST, it's now reversed. CGST, output GST. Okay. IGST, output debit. How much? 12%, 600. To Kapil. To Kapil. Is that clear? The final value is 5,600. Goods list price 20,000 written by Manpreet. Manpreet. Manpreet, here is sales. You have to link with that one where 20% discount is there. List price means price list. The price available in the price list. 20% 4,000 is subtracted, only 16,000. This is sales return. Now you can pass the entry as usual. Here IGST 12% is applicable. Okay, IGST 12% is applicable. So sales return upon debit. Sales return upon debit. IGST, output IGST account debit to Manpreet. Manpreet. The value being sales return 16,000. 12% on this being 1,920. Total value being 17,920. Is that clear? Now, the IGST is not applicable only for the purchase and sale. Sometimes it may be purchase of assets, sometimes some facilities you enjoy. You pay the rent. For the rent also you have to pay the GST. That case also similar one you have to pass. So we'll see the additional illustrations. If it is clear, text me. We'll move on to the next one. Make it faster. Make it faster. Some other transactions here related to GST application. Goods costing 20 were withdrawn for personal use. Personal use. It's a reversal of purchase return. Just similar to the purchase return. It's not sales. It's not sales. Then entry being drawings upon debit. Drawings upon debit to purchases. Along with the purchases, the applicable GST also be reversed. CGST and SGST to CGST input to SGST input. Input reversal. Don't name this being output, right? The purchase value is 20 and 9% being 1800 for CGST, SGST 1800. Overall value being 23,600. Paid rent to Gagandeep for rupees 30 plus CGST and SGST. Rent is paid. While paying the rent, you are paying the GST also. Then rent upon debit. This will go to the owner, landlord, 30. And for this service, you have to pay some money to the government also. That is called CGST. So CGST on input and SGST on input. 6% each. 1800 here, 1800 here. To bank. This value being 33,600. Received 25,200 from Surjit in full settlement of his account 28,000. So we have made the payment lesser. The amount payable, okay, to Surjit is 28 but paid only 25,200. The journal entry being we are receiving the money from him. So the difference between these is discount row. So bank account debit, discount allowed account debit to Surjit. Value 28. Collection is only 25,200. The difference is discount allowed. This was already studied. What about the GST in this case, sir? You never bother about the GST in this case. Okay. This amount, this amount. The Surjit amount, no, 6% is GST is there. So I want to reverse that, sir. Usually in case of discount allowed, unless clearly stated, you don't need to refund. Otherwise, you have to reverse that GST also. Okay. We'll see such a situation comes here. At your inter levels, GST is a separate chapter, a separate subject. We'll study all these things. In case of discount, already known, while giving the discount, you have to reverse the GST also. That's a statement. Otherwise, you cannot reverse that. Otherwise, you cannot reverse. Some case you cannot reverse, some case you can reverse. We assume here that GST is not reversible. So that's simple generally we have passed. Received commission rupees 15,000 and charged CGST and HGST 6% each. Received commission. So bank account debit for what? To commission. To commission. You are receiving commission. Commission worth is 15,000 you are receiving, but you have to collect for what? GST also. You are collecting CGST and IGST. Commission receipt means it's an input, sir. Means output. You are selling. Okay. To CGST CGST output to SGST output. 6% each, 900. So the overall bank account be okay 16,800. 16,800. So GST related transactions are over now. Clear? Now, last one. If it is clear, text me. So we'll move on to the last one. Mutual Owings. How can we pass the link? What does it mean? So we are going to account for SSA. We are going to account for SSA. For SSA, he has to get the money from debtors. Okay, 1 lakh. SSA has to pay money to the creditors. Around 60,000. Is that okay? Clear? One of the debtors being Mr. A, from whom we have to recover 15,000 because we sold 15,000 rupees worth of goods to Mr. A. He has to pay me 15,000 rupees. Is that okay? Amount recoverable. From same Mr. A, we have purchased goods worth rupees 5,000. Okay, so from this it is very clear. For the goods sold to Mr. A, we have to get 50,000 rupees. For the goods purchased from Mr. A, we have to pay 5,000 rupees to Mr. A. Why do I want to give and take? Can we cancel mutually, right? That is called mutual owings. Okay, I am owing to Mr. A as well as I am recovering from Mr. A. In that case, to the extent of equal value, 5,000 will be subtracted so that Mr. A pays 0 later on. And from this, 5,000 is subtracted, so 10,000 he has to pay after adjusting. So you have to pay me 15,000 rupees. I have to pay you 5,000 rupees. Adjusted balance, you have to pay me 10,000 rupees. That mutually adjusting, for that how to pass it into for this transaction. For this transaction, debtors is going to be credited and creditors is going to be debited. Creditors upon debit, to debtors. Value being 5,000. To the extent of amount remains common between these two parties, these two values. Thereafter, you ask A to settle the balance. For that, the journal entry being bank account debit to debtors. Bank account debit to debtors. Is that clear? Clear? This is the payment for the balance amount. This is the balance for settlement between the equal values. Now, asset purchased but payment made with the debtor. Already we have seen. Okay. So where we purchased a car, for the payment is made by one of my debtors. The same happens. And sometimes it may be reverse. Asset sold, the money I didn't get. One of my creditors is taking over. So how can the journal entry for this case? Asset account debit, payment I didn't make, my debtors, two debtors. Is that clear? Asset sold to asset. I have to debit the bank account now, but I don't have the bank account. Rather than bank account, what happened? That party has taken over. My creditor takes over. So creditors account debit. These are the unique transactions may also will come at your professional level. So I have given the opening. All the journal entries what we have covered up to now will be very, very useful even at final level. It's a collection of different entries I have seen up to final level. Okay, though it may be journal entries. You may think that journal entries are very simple. It's already learned in your plus 1 and plus 2, even college days also, no issues. These entries are, each and every entry may be different and unique. I give the concept behind so that you will understand full journal entries. You master with this. Of course, no way it is connected with scoring mark. But this will be the foundation for understanding the subsequent lectures. Is that clear? That's all about the journal entry. Subsequent lectures will go with the comprehensive illustration of this.